All right. Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for March 17th, 2025. We are recording this at 7 p.m. Eastern Time, our new regular time for this weekly show. And this is episode number 470. Today, the option professor is here to give you an update on his thoughts on quantum and tech stocks and everything else going on in the markets. So I'm going to go ahead and turn it over to the option professor.
Okay, thanks a lot, David, and thanks everybody for being here. I just wanted to start out by saying that tonight I'm going to be going over my opinions and I'm going to be going over my observations, and I'll be going over some specific ideas. But again, everything you're going to do you have to talk to your broker and your advisor to see what's suitable and what's not. And nothing I'm going to talk about today is going to be an absolute recommendation because obviously that's not what we do. We just share ideas. So again, a little background on myself for you guys who have not heard what I do here. I'm Jim, the option professor. I've been doing this for decades, and I specialized in options throughout my career, so I'm very knowledgeable in the subject area. And I'm going to share with you these ideas here today. We're going to go over the quantum ideas right now, and then we're going to go into what's going on in the markets. And then I'm going to go over some different stocks that people might have an interest in. And then, of course, there is a chat box there. So if you'd like to throw a stock that I'm not talking about and you'd like me to take a look at it for you, I will be more than happy to do it. So, again, that's what we're going to try to accomplish here. It'll also be similar to what I try to go over each and every week on the options alerts that we send out every Sunday night. Okay, with regards to the quantum computing, we know that this week and again, I got in front of this a long time ago because I figured this week would be very good, or anticipation would be very good for the quantum stocks, which I'll get into in a minute. Last Thursday, we had a meeting and we went over all these things. The following day, some of these things spiked up big time. So, what's going on is a developing AI developers conference, March 17th, which is tomorrow, or started today, I guess, and goes through the 21st over in San Jose at Nvidia. Basically, they're bringing the sharpest minds in AI together, looking for breakthroughs. There was a big breakthrough, I guess, with D-Wave. That's why it went up so sharply. But basically, they're looking at the quantum technology to be faster, quicker, better than the other technology that's going on now, and able to solve a lot more complex problems, and also to eliminate incorrect answers to those problems a lot faster than they do now. So that's one of the big advantages of the quantum computing, is not to replace AI, but more to enhance it. And again, Nvidia has some risk to it because a quantum computer could replace the data center GPUs. So obviously, they're over there probably trying to figure out how they could mitigate the risk that quantum might pose to their own business. And so, or also bring an additional feature to their business that would make them more attractive. Because again, the capex spending that is announced, it's not guaranteed. If the market went into a recession, or they look at the return on investment that doesn't seem like it's there, then of course they could adjust their capex spending. So in order to try to hedge against that, I think they'll try to bring something in the quantum computer area into Nvidia, which means there could be some big announcements this week at the end of the day. There's some stocks that are there. They're going to be interviewed by Kramer later in the week. And I was going to take a look at those stocks and see if technically it looks like anything might be going on there. But again, that's what's going on this week over there in San Jose. And a lot of people are focused on it. All I was interested in is what stocks might go up, and if in fact that is going to happen. And I did identify a number of them, and they did take off pretty well last week. So let's, without further ado, talk a little bit specifics about some of the stocks that might benefit. Some, of course, are large cap, and the names on those. I don't think I need to get into that. IBM is a big player. They've got this thing called Qiskit, which is an open source quantum computing software development kit. They've got a bunch of other things going on, roadmap and quantum utility. You've got Google. I'm talking about the big players here. And Google's come out with a new quantum chip called Willow, which significantly reduces errors as it scales up, a major breakthrough in quantum error correction. So they got that going. Amazon's, of course, AWS, and they've got a new chip called Ocelot. I think it's called Ocelot. And basically, they've got a center for quantum computing, cloud-based quantum computing. And they've got a thing called Penny Lane, which is an open source software library of quantum computing and application development through their Amazon bracket. So they're heavily into it. And the last one is the one that's had a lot of legs lately, Intel. And Intel is active in quantum computing, computing R&D, focusing on silicon-based spin qubits and working with research institutions in the field. So they've got their definitely their hat in the ring. Pando tree chip, focus on scalability and manufacturing. Again, with Intel, they're trying to figure out if this new guy is a breakup specialist or a growth specialist, meaning is he in there to break up the company as we know it now, or is he in there to take Intel to the next level? Hard to say, unsure just yet, but certainly investors have been liking it. I'll just put Intel up there so you get an idea, because there is quite a bit of room to go if, in fact, Intel did want to get going. Let's take a look at the chart here. INTC. And we will get into this right now. Come on, Intel, don't be shy. Show yourself. Okay, so we'll go to the 20-year graph. I always like to start wide and come back in. So as you can see on the 20-year graph, you've got, let me throw the RSI up there, see if we can catch some divergences. It's nice to catch a divergence. That means the selling dried up and you got a pretty good shot at a bounce back. So let's put that up there real quick. All right. So as you can see here, yeah, this is a big divergence. You see, this is a low and the RSI is around 30. And down here, it's at 43. That's a big divergence. That's why you're getting a really nice bounce, okay? So that's the story, but it's got resistance. Maybe it'll go to the apex. You got three guys meeting right there at what price? Around 32 bucks. That would be my target on this thing. That was my target when I put it on the alert when it was back in the low 20s. So I've had this on the alert now for a couple of weeks, I guess. And this is definitely a good one. But it's got some resistance right here at red, which comes in right at 27 bucks. And so right now it's, it backed off of that number, as you can see. So there is some resistance here. Again, if he's a breakup specialist, it's a totally different story than if he's going to add products that's going to boost revenue. Because like I say, companies that are making money by reducing expenses can only go so far, right? Okay, now you got all these bottoms on the 5-year graph, and it looks like it's trying to break out here. So that's a good sign. And as long as it can stay above these three here, which comes in anywhere between like 22, 23 bucks, you got a good shot of going back towards purple. Remember I said 32 bucks? Well, that's where the purple line is, 32 bucks. So that's a reasonable expectation if the thing gets moving. And on the 1-year graph, you have got it running right into the red gold line. So now we know all about, you need to know about Intel. Why is it having trouble up here at 27? Because I showed you on one chart, there was a number at 27, and I got the gold line here at 26.25. So that's why it's had a hard time getting through, right? Now, support looks very strong down here at 22. And we know if it can break here, going to 32 is pretty much of a good deal. Plus, that would also fill this gap up, which has been hanging in there ever since that big drop in August. I think it was August. Let me see. The big drop was in August. Yeah. All right. So there's your story on Intel. It's got a lot of real estate that it could take off if it ever came up with a decent product that they could sell. Actually, a full Monty reverse version could even take it to 42. But it will have some difficulty, I would imagine, at 32 to get there. But if it got above there, your next stop is 42. So again, those are the big ones in there. Now we are looking for the big growth player, right? The one that goes from a very low price to a big price. So let's talk about those now. First one is D-Wave, which I talked about last week, and I thought it was a good thing to look into, get into. So let's look at the QBTS. It's had a pop, so is there any more left in it? Let's find out. Hold on here. This thing's got a mind of its own. QBTS. The D-Wave. All right, here's a story on the D wave. Hadn't been around all that long, so we're going to start with a 5-year graph. And the 5-year graph tells us that obviously this is when it was down and it was a good deal. You see, when they come down to the line, that's where you want to load the wagon if you're a believer that this uptrend will continue. And why wouldn't you be? Those lines are all pointing straight up. Now it's up in a little bit of the O zone here, and the RSI here was at, wow, 94. And now the RSI is at 71. So that's a divergence. So what that means is that it could be running out of volume. And if it's running out of volume, it could have a pullback. And where could it pull back to? $7 is not off the table. Let's take a look. Yep. So here's all the support is down here. It's got a gap at 7. So, this is where having some put hedge on your bullish activity might not be a bad idea, because again, this thing has gone straight up. And if the enthusiasm is misplaced, and I know that there's a divergence, meaning the volume seems to be a lot weaker this time than last, then obviously it could fall under its own weight, because there's not a whole lot of support when you got two straight lines like that and you got a gap down there. So if this week does not go well for the convention and the whole concept of AI, tech, and quantum, then this thing has vulnerability. But last week when it was at 6, obviously that was the play, and that was last Thursday when we were talking at the webinar. But again, this is the kind of deal, because it is. Now, the other thing you got to know is how much short interest. There's well, last time I checked, was 20% short interest. That means people own this stock and they probably shorted against the box. What does shorting against the box mean? It means they own the stock in a type 2 and they sell the stock short in type 3. So they're long and short the stock at the same time. Because obviously, if you own the stock on an offering and it went all the way up to 12, you might sell, might short it, but you don't want to, maybe it's locked up and you can't sell it. I don't know. There might be reasons you can't sell it. So that's why they short against the box. That creates a large short interest. Those people have it on as a hedge. When you take off your hedges, obviously they all took off their hedges on Friday. Not they all, but there are a lot of people taking off their hedges Friday when they came out. And what did they come out and say? They said that they have a computer called the annealing quantum computer that outperformed one of the world's most powerful supercomputers in solving complex magnetic materials simulation problems with relevance to materials discovery. That's a mouthful. Basically, I think what it means is obviously they came up with something that's better, faster, quicker, and that's always going to be interesting to the tech communities. And obviously, if you were short with any hedges, you obviously wanted to get out. And if everybody wants to get out and nobody's selling, market makers like Citadel, Goldman Sachs, whoever, they're going to put the price up at a level where they feel comfortable writing a check, right? So obviously they wanted to get it near that 12 number because that's the former high. And so far, selling it at 12 is not a bad deal because it's already down to 1088. And again, one of the reasons it's down at 1088 is because we had the divergence, and the new high of 12 was being done on less strength than it had the first time it was up here. Okay, that's a simple story for a complex situation. But in any way, that is the story. And again, at the meeting last Thursday and last week, when I was talking to people about it, was the time to put on your deal in advance of the announcement of what they talked about and in advance of this conference, which some people are optimistic about. Okay, so that's door number 1. Let's look at door number 2 here. Door number 2 is going to be IONQ. So let's take a look at IONQ and see what the story is there. Now, IONQ only has 10% short interest, so it doesn't have to do. By the way, D-Wave also going into this week was only a $1.8 billion market cap. So that's a small cap as small caps come. This guy here is 4.8 billion market cap, still small cap, but 10% short means it probably didn't get the bang the other one did. And as you can see, look, it didn't get the bang, but look at it hitting the gold line. Gold is a very, very important reversion to the mean. That means it's an excessively extended reversion. And certainly, wouldn't you say $55 down to $15 or $18 is a pretty good reversion? So right now, your line in the sand is $17.49. If it got under there, Lord knows where it's going. And where could it go? Well, you've got the two things meeting right there. So it could be some resistance right there at 28 bucks. And then after that, you can go up towards 32. Now, on the 5-year graph, does it open the window better? Well, it held the blue line after it penetrated, so that was good. And here you could always go up to the red, which is 35. So if it can get above that 27 area, another $8 quick pop could very easily happen if they get good news out of this meeting. Again, you're not going to be helped with the short interest here. It's only 10%. Well, 10% is pretty high still, but it's not like 20, right? So anyway, keep a little bit of an eye on that. Right now, right, you definitely want this thing to stay above 23 bucks because that's where the blue line is. And over here, where do you want it to stay above? Well, red is at what? Red is at 22 bucks. So there you go. 23, 22 bucks should be the as much as you want to go. And if it ever takes out 17, something is really wrong here. So those are your numbers. And again, what are they into? They are a leader in the field. They develop and sell trapped ion quantum computers and related software. Their computers are accessible through major cloud providers and are designed to tackle complex problems like in chemistry, medicine, finance, and logistics. So again, these guys are going into many different fields to be a value-added situation. So that is the story on IONQ. This next one had big short interest as well. And of course, it was a darling, always in the news, and then it tanked. And that is Rigetti. So Rigetti has over 20% short interest, just like D-Wave. It is only a $2.5 billion company, so it's small cap, even smaller than the IONQ. Their basic claims to fame is they're basically a full stack computing company, design, manufacture chips, integrate them, develop software for programmers to use to build algorithms. They offer quantum cloud services, on-premises systems, Forest Cloud computing platform, and a Quill. So the bottom line is that they've got a lot of bells and whistles. And again, their manufacturing of chips is very interesting to people, I think, as well. So this guy here had a nice pop. Again, last week we were looking at it between 7 and 8. And of course, it popped to 11. It stalled out here. Let's see if we have any kind of, let's see what it looks like on the 5-year. Yeah, the 5-year held the green line. That's lovely, right? So you don't want it underneath $8. And then, of course, the blue is down here at a little bit under 6, and purple's way down here. So if this thing comes down and tests that, but again, all the averages are pointing up, which means this is not a downtrend. Well, to me, these are all my opinions. And then here it held purple pretty well, and the red's trying to turn up. So if it can sustain itself, again, blue being down is not a good sign. So right now it's having a little trouble in the blue area, and the blue area comes in ballpark figure at about 1082. So if we can stay above 1082, get these lines to turn up above blue, then it's going to have tremendous potential, maybe even go up and fill that gap. Or maybe even more if they really hook up with somebody during this convention that can bring them more revenue. But yeah, this one, there's a reason why it stalled out here. Now, if this meeting and conference does not light the flame, disappoints either on innovation or on value-added partnerships, then of course these things can go right back down. So you have to be careful. But again, some of these long-term options, if you went out to like December, or I was even looking at 26 and 27 options. You could take a limited risk on some of these things, and if they're really going to be the cat's meow in the next 2 years, you could go with a limited risk long-term option. Let's see if I can just show you an example of one. Say we wanted to lock in something here and just go to bed. You know what I mean? You have a limited risk. You have the right, but not the obligation. Let's say you go out to 27 January. That gives you all this year and all next year. And the stock's at about 11, right? So, well, these things, you could do a call spread on them if you'd like, where you buy one call, stock's at about 11, so you go a little bit out of the money at 12. These are ballpark figures. So you put up 585 just as an example, and you sell the 22, and maybe you can get $4. So you're in there for $1.85, and you're trying to make 10. If it can go up to 22 or better, that would be a double. But of course, that's after all this year and all next year. So that's one way of doing it. 2 to 10 is not going to hurt anybody, and of course, your risk is limited. Or if you really think it's something you want to maybe take delivery of, in other words, exercise your option and take the shares, you could buy it outright at 12 and pay your $585 there as an example. And then you're good for 100 shares. And if it can go up from there, you'll be all set. So obviously open interest is pretty big there. So I'm not the only guy talking about this game, right? 4,000 and 3,000. So it's not a lonely town here. And well, I'll go back and go over the other two here I got for you. The third one I have for you is called quantum computing. And the symbol is QUBT. Like I say, you can go out there and price options in La La Land, meaning a year out or 2 years out, and you can see if they make any sense to you. But again, that's a long-term situation where your risk is limited. You have leverage. So if it happens, great. And if it all goes to hell, at least you know to the penny what you're going to lose because it's a limited risk situation. All right, quantum computing. Let's see what this guy looks like. Start out with the 5-year. All right, what's the 5-year telling me? Went down to gold, so that was the place to take your shot. So far, so good. But again, you're not going to make the big bucks on this unless you can get these moving averages on the other side of the blue. And like you did here, you see when they're on the other side of the blue, boom, 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 right? So now it is above the blue, and the blue comes in right now at oh, come on here. 766. So you want this baby to stay above 766 because if it doesn't, it could go back there to anywhere between, well, could go back down to anywhere between there you go. 560, 654, and 766. So there you go. And you've also got the purple in there at 668. So again, the RSI is trying to peek through. It's above 50, but it's in that neighborhood near 60. And that neighborhood of 60 generally is going to be either it's going to be a failing at that level or it's going to accelerate to the upside. So one good thing is it's probably got either an acceleration rally ahead of it or we just had a bear market bounce and it's going to come back down. So anything you do from the long side, you might want to try to put on some insurance on the downside in case the bottom falls out. Again, if they don't have a good week this week, these things could come under pressure. If they have a good week, again, short interest on this guy here is 14%. Nothing in the 20 or better range, but 14 is nothing to sneeze at. There's got to be some people who are hedged and they see that gap there at 16 and they go, this thing could jump to 16 if it gets going. And if it fills that gap and I have my short on, I'm not going to be very happy. So that's another one there that you could take a look at as well. And just either price out the shorter term options or use the longer term ones if you want to do limited risk. Okay, last one I've got. Oh, by the way, what do they do? They're an integrated company offering accessible and affordable quantum machines. That sounds pretty good, right? Accessible and affordable quantum machines. With the proliferation of Costco and BJ's Wholesale and all the rest of them, seems like accessible and affordable might have some interest, right? Okay, the last one I have for you right now is going to be Form, F-O-R-M, Factor. And Form Factor See, the thing I liked about these things a week or two ago, knowing this convention was coming up, is how cheap they were. Which means, they're down on the dumps. They got a big convention coming up. Somebody's got to be wanting to spec that it's going to be an improvement. Somebody's going to spec that they're going to cover their hedges a little bit, right? So that's why I thought last week and the week before, knowing this event was happening this week, I thought it was a pretty good thing to step in front of. These guys develop and design, manufacture cryogenic environment systems, essential, I like that word, essential for quantum computing. They don't have much short interest, so they're not getting a benefit of a scared crowd. They only have 4% short interest. But they are in the dumps here. Let's go to the 5-year graph so I can put it in perspective. They are down, right? This thing went from, let me just check on, well, yeah. So yeah, these things broke down. But you see, the gold and the purple are still rising. These red and green, they look terrible. That's why this thing has been a sell ever since 50. I don't know anybody who owned it because I just started following it recently. But if you own this stock and you held on to it, this is something that would have been telling you, listen, either hedge yourself or get out because the likelihood you're going to rise when stuff looks like this is not very high. So that's why, one thing I try to do with people who have our service is if they have a question on something and they want to look at a stock that, they own, getting a second opinion or a second viewpoint at it sometimes can be very helpful because, sometimes you don't get a whole lot of, shall we say, unbiased talk from people. So you need to maybe talk to somebody who has absolutely no particular interest in you holding on to it and is trying to give you an independent view. Anyway, so that's the story there. It has a low surrounded by higher lows. So you don't have to be a genius to figure out we need to have 30 hold on, right? You could use that as a point. Then as far as the 1 year, doesn't get any prettier, I don't think. I mean, like I say, you see this thing on the 1 year? God, the darn thing turned down at 64. You've been holding on to this thing. Then it broke under purple, and that was really the death knell. And then you had a couple of rallies here, but these are baloney rallies. Why are they baloney rallies? Because the purple line never turned up. Blue barely turned up for just a little bit. So even if it went up through here, once it got back underneath purple, which is basically in that 44 range, this thing was back on the Titanic. Now let's look if we have any divergence here. You got the low right here, and where's your RSI? 38. You got your low here, 32, and you got a new low here at 30. So you don't have much of a divergence to work with. Now it's popped up pretty good, though. It went to 42, and it's above the red line. But this one here is living underneath 50 on the RSI. That's not good. But again, it is if you believe in this kind of thing and you believe this company might be a player, obviously half price has never been a bad deal if there's value here. If there's value here. A rebound rally, obviously, you know where the numbers are 34, 36, 41, 46, if you can get it going. On this guy here, where's your rebound? Looks like right here you got a traffic jam. So most logical place on this guy would be around 38 bucks. So there's your lines in the sand as far as the down move. But we'll have to see if this week can turn some of these things around. If they can, great. If they can't, they're already in downtrend, so I don't think it'll be too hard for them to go back down again. The D wave, because they have something that outdid the supercomputer, they're obviously probably the lead horse in getting a deal with Nvidia. You don't know, but I'm just guessing. And of course, Rigetti, because they make the chips, of course, that might be interesting as well. So those two are the ones that have the huge short interest, and they may have something that Nvidia might like. Now, since we are talking about the Nvidia webinar, or not webinar, but conference, let's look at Nvidia because I think I've had that one down pretty good. I'll show you what I got. And then I'm going to show you the big problem with tech. Because we'd all like to jump back into tech and have it go back to the highs, right? Lovely thought. Might be unrealistic. Let's see. Okay, Nvidia on the 20-year graph. Well, that doesn't go back very far. Let's go 5 years. Okay, as you can see, these things were telling you that the major bearish to bearish to bullish switch was happening. So this thing was a no-brainer, and you could have followed it up on the blue line, never gotten out, and you'd have made yourself a big fortune. Okay, but some things have changed a little bit since then. As you can see, when it broke under 130, which I did not like, it changed things up. Now, blue is not pointing down, so we don't have a definite downtrend, and green hasn't turned down. So if we got back above 130 and definitely above 140, then I think this is a trend you'd want to jump on, because then it's showing you the legs that it needs to get back on the horse. Right now, it's basically barely back on its feet. So if you're going to get in this thing, you want it to be back on the horse. Now, again, they are telling us that their margins are going to be better at the end of the year. So their margins start to slip. They were in the 77 area, went down to 71. They say it's going to come back. We'll have to hear what they say about that. Also, they are all dependent on CapEx, and all those companies, if things went sour in the economy, CapEx is not exactly a guaranteed deposit, right? I mean, it's something they could dial back very quickly. And obviously that would hurt Nvidia quite a bit. So, and maybe that's what this thing is telling us. So Nvidia on a long-term basis, got to get above 130, 140. You're not going to make big money on it until it does. Then you go to the 1-year graph. And I thought this 115 area here was a good one. And it was. Look at the rally I got. So I thought this was a great place to buy, and it was. But then when it gets back under purple, you know you're in trouble. Then it got back under gold, and it really looks like a flush. Then it popped back above the 115 area on Friday, and I thought that was a positive, or Thursday, sometime last week. So I thought that was good. And then, of course, right now the gold comes in at what price? Gold comes in at 120. So you want this thing to stay above 120, and it's having a hard time doing it. But if it does, that's a good sign. It should have a little bit of a pause at 125 because we got those two guys waiting for us. And then you've got the 135. So that's why I was thinking more like get this baby above 135, 140, and it will open the door to all those great numbers that you hoped that it would go to. Okay. But it is a little bit under pressure. They've got to come up with something exciting. I'm sure this Jensen guy knows that, and I'm sure he's going to try to come up with something that turns the optimism light back on in the room, because the optimism light has been turned off. So, and again, everyone talked about what's going to happen in 26 and 27. God bless them. A lot of people have a hard time finding out what's happening in the next 3 months to 6 months. And right now, the next 3 months to 6 months has not been looking very good for these guys. Again, similar to the stock market, it's got to get back on the horse, because the longer it stays under 130, the more that these averages are going to roll over and start pointing down. And as you can see, when the averages start turning up, it's like a big old whale. It's hard for them to turn back around. So keep that in mind. On the S&P, the number is more like 5,900 to 6,000. The longer we stay under there, that turns the long-term graphs down. Besson says corrections are good. They're healthy. The stocks going up sharply are not healthy. And so if that's the guy running the Treasury, that would make you a little nervous that there's a put underneath the market anytime soon. So we'll have to see. These guys do change. They talk out of both sides of their mouth from the standpoint of, I thought the other day he said there was going to be no recession. Now he's saying, the slowdown is not a problem. So we'll have to see what they talk about every day. Here's the thing that's a problem, though. SMH. This thing peaked out in July of last year. Could it be that the tech trade stopped in July of last year? Look at that high point, right? And look at those lines starting to point down. So the longer this baby stays under 246, 243, the more these lines are going to be pronounced, and it opens the door to go down to purple here, and purple comes in at 190. And under that, you're under 160. On a 1-year graph, see, it broke everything. So this is a bear market. I mean, come on. Anything that hasn't made a new high since last July, we're going to have, that's a long time. Now that has stocks like Nvidia, and it's got Broadcom and all those kind of guys. So there's been a couple, and Taiwan Semi. So some of them have done pretty good, Broadcom, but you can see why some of these other ones are having trouble. Now let's talk about Microsoft, because obviously they're in the forefront, and it'll show you something else. So this is something not many people talk about, which probably makes it important. And this is Microsoft. So you go to the 20-year graph here, and you can see this peak right here. And what's that say on it? Oh, it says July, right? That's also when the yen and the dollar switch their little values too. Some people think that's important. But this guy here, this thing, it's not tanked or anything. Kind of tanked, but not a lot. But again, things are starting to roll over. Now, if it's going to be holding up, there's your number, 367. Only $20 away, and we'll have to hold there. If you don't hold there, it opens the door for down here. And again, that's not the setup. That's not where people make the big bucks on Microsoft, right? They make the big bucks when it looks like this. They make the big bucks when it looks like this. When it starts to look like that, it looks more like going from where? 340 bucks down to 220. So that's a $120 move. $120 move here takes you down to 320. So there you go. Maybe it's on its way to gold. Who knows? But I'll tell you right now, you might want to take a bite out of it if it comes to 367 and see if it holds. But if it doesn't, don't kid yourself. With a S&P falling apart, this thing could have a problem. I just think the important thing is do you think anybody in the world thinks that the entire tech thing, AI thing, cloud computing thing, peaked in July of last year? I don't hear that a lot, but the chart tells me that might have been what happened. Okay, so that's pretty much the tech stuff. I would like to give you a little bit of an around the world here on what I see happening on some of these markets. Let's talk about the S&P. Okay, I'm going to use the SPX, which is the cash. And I thought it might jump up to 57.50 and have trouble there. We'll have to see. Okay, why did I think that? First of all, reversion to the mean. You know what that means? That means you're way up here in La La Land. You just reverted to the red line. The next stop after the red line could be the green line, which is 51.21. And then even as low as the blue, which comes in at 47.38, which coincidentally is not too far from the highs at 22. I think a full Monty regression would be to 48.22, which is the former highs. That would be a 21% drop from the peak. That's not that big of a deal. We've seen 21%. In God's sake, in December of 2018, when Trump was doing the tariffs and all that kind of stuff, we got a 21% drop in the market. And Besant is on the TV acting like that's normal and healthy. Well, normal and healthy, it is not going to be very good when you look at your statement, right? All right, so there you go. That's what I'm seeing here. Now, on a shorter term basis, what could happen? Again, like I tell people, the longer we stay underneath 5,800 and 6,000, the more likely we're going to go down to these numbers down here. Look where gold comes in, 4,400, right? 4,500. So as time goes by, this thing will be rising. So if it took a few months to go down there, that's where the gold would also meet the other ones right at 4,800. And where's the purple? The purple's right at 4,900. So if the longer we stay under 58 and 6,000, that is going to be technically negative. Okay, let's go over to the 1 year and see what else is going on there. Okay, you see, we got back above gold, which I thought was very nice because again, I was looking at 5,500 on something else. Let me see 1 second here on my 5 year. Because there was a reason why I stopped at 5,500. I thought there was another high point at around 5,500. Let me see if I can see anything on any of these other ones. No, Not really. Okay, so anyway, the story is that you are looking at on the 1 year graph, it got above gold. So again, I thought that was a positive. That comes in at 56.29. So as long as we can stay above 56.29, you have upside potential towards the red line, which comes in at 57.12. And today's high was 57.03. So there's a reason it backed off. And then you've got a fuller move, if it can do it, up towards 5,900. The 5 year graph, as we know, has the blue line coming in at 5,800. So it could stop there as well. So you notice there's a lot of resistance, right? There's resistance, but where's the support? And the support is way underneath on the longer term graphs. And it is right here at 56.29, because sometimes they just peak underneath. And then once they get back above it, that's a good sign. So if you're bullish, definitely stay above 56.29, or else if it takes out 5,500, all those lower numbers that I talked about could happen. Very oversold here, so you could keep bouncing, but again, and there is a what they call an air pocket right there. But if we start getting under 56.29 and the news goes sour and the conference goes bad, then it's going to be a different deal. Otherwise, there's your line in the sand, in my view, around 56.29. How about the QQQs? Okay, 20-year on Qs. 480, got to get above 480. It's above 480, better stay there. 5 year graph, got to get above 500. The longer you stay under 500, the more that these things are going to turn down. And if they turn down and look like this is 2022, and that was a full Monty decline right to the gold. That's where I would have been telling you that's the place to take your shots. Definitely when all this turned up, that's another place to take your shots. But right now, now that's a low surrounded by higher lows. So that's a key number, 466. They take out 466 and you don't know what's going to happen. Again, going back to the old highs here is at 400 to 420. Can't rule it out because the numbers, the moving averages are waiting for you. And on the 1 year, it got above the gold line, which is a good sign, but it's running right into red. So you got to keep this baby above the gold, and the gold comes in at 482, which is why it's sitting here. It's going to make a decision. And turnaround Tuesday, I don't know. If they can't make it go down on turnaround Tuesday, that's a very good sign. So at least you know what you're looking for here as far as I'm concerned. I'm looking at 482. And if it starts being able to get above there, and of course 486 is where the red line is, but they're all pointing down, down, down. So you're kind of, going against the flow, you're hoping that the rain stopped down here and you can get a little sunshine. Unfortunately, if it's rolling clouds, the rain will come right back in. And the cheapest one on the bunch, by the way, short interest is pretty high. On S&P, SPY, it was about 10%. That's why there's a lot of people to cover their hedges. Then you've also got 7% or better on the Qs, and you've got 28% on this next guy. And there's a lot of people. I've heard Tom Lee talk about the small caps, but what he's been talking about hasn't been panning out, but it can always change. But it has held this number. I'm going to give you a number, and I think it's a number to use as a support. You see that 195? That's the number, 195. Last week's low, 197. Not coincidental, and it's popped off of it. Let's look at the 5-year graph. Again, look at that. Come on, I'm telling you, right here, where those numbers come in. 196, 198, 195. That's your neighborhood. If it can hold there, you got something to defend. And obviously the calls are probably cheap down here, and probably the stocks are pretty cheap. So this is the neighborhood that holds, because if it doesn't, do you see anything underneath? You see anything underneath? I don't see anything underneath. What do you see on the 20-year? Anything underneath? Oh yeah, you got the purple down here at 170. So it is a mess, and talk about something that's never made new highs. Let's go back on the 5-year, and you see this thing went here, and look at the RSI up here. What was it at? 64. Again, if you can't get through the 60s, it's not going to accelerate to the upside. Just got up here again. RSI was 57. Again, if you can't get through the 60s, you're not going to go accelerate to the upside. If you're not going to accelerate to the upside, you're looking at the top. Now it's holding on for dear life. So again, too late to sell and hoping it'll stop here. If they could get interest rates to go down, this thing would be very helped out because a lot of these companies lose money and they need to borrow money to keep going. And borrowing at lower costs is always helpful, right? But this is trading at the biggest discount to the other indexes, I think, in history. So as far as valuations, this is the one that has lowest valuations. Speaking of fiscal policy and valuations, let me show you where the money has been going this year, which I talked about in my newsletter 2 months ago, maybe 3 months ago. And basically, I even did some in August, so it'd be even more. But I've been touting this international market stuff for a while. Alibaba was one. But anyway, let's take a look at China here. And you can see that it is turned up down here, just like Alibaba. And then it came back and tested. So there's your place to take another bite, revert to the mean and take your shot. Now it's up on the run. Not a great place to start doing business because you should have done it down here on the dip or when it broke gold at 34. But there is a lot of upside potential here, and they are trying to get their tech sector going. So the one I've been focusing on is KWeb because they've got the DeepSeek, and you've got this Boyd or something like that, a car company. Supposedly they can fill up your electric car in 5 minutes. 5 minute fill up. That sounds like going to the gas station. Now that's starting to sound interesting. So if they got this technology going, a lot of this stuff could get going. If this baby can get above the gold line, you can see that there's a lot of real estate above. So the fiscal is now stimulative over in China. We are going with austerity. That's why the money's rotating. Where else is stimulating? I'll give you one. This was all talked about in the news, in the alerts that I come out with. Now, Germany is spending money for the first time ever, seems like. And so money, that fiscal, remember, fiscal is getting more expansive in these two countries, and it's becoming restrictive in our country, right? They're firing everybody who can walk and chew gum. So this thing has been a pretty good deal ever since he got in office, and they found out that he's not going to just totally go crazy. Now, again, it's extended, so it could come back down, but it's been a good place to be in the last 2 months. How good of a place to be? Well, let me give you some numbers to back that up. Year to date, China up 28%. Brazil, EWZ, up 17%. And that's coming out of the doldrums because they had some problems. Let's look at the 1 year. See, he's trying to make a break. I think that's about a 61% retracement from here to here. So that was a Fibonacci. The blue line was pointing straight up. You got above the green and the blue right there. You're home free at 25 bucks at that point. Now it's got resistance above, but I'm just trying to say money is going elsewhere. And again, on Europe, you saw that as well. So Europe, by the way, is up, I think 15% for the year. And these guys are up 13%. So that gives you a little idea of where money's going, which is international. I wanted to bring that to your attention. And then I wanted to talk about some of the different markets because some of these energy shares are starting to move and people are probably wondering why. Wonder no longer. We're going to look. This is the XLE. Big thing is Chevron and Exxon. And you can see it had plenty of opportunities to go in the tank here in March, and it's making a turn. And that's not a little turn. That looks like a pretty good turn. Let's see if it holds. Let's see if it holds. If it holds, though, something could be going on in the energy sector. And I've got a whole bunch of energy shares that I think are interesting. So I can discuss that with you as well as in the report. I talk about them as well. With regards to the financials, let's look at old JP Morgan. Are they on sale because deregulation in the second half is going to make these guys fly? They got earnings coming out on April 11th. Not a bad time to look at this stuff because the last time I looked at it before earnings, you know when it was? I'll show you because it was right on the alerts. This time right here. Why was that so obvious to me? Because it's a consolidating moving average. These are all different time zones 12, 24, 36. If they're all coming together, didn't that sound unusual? Of course, it sounds unusual because it is unusual. They're totally different time frames. So unusual doesn't last. And then with the blue line rising and their earnings coming out, I thought it was a very good idea to try the shot at calls, and those calls did very good, as you can see. But up here, I thought there could be a reversion to the mean. I didn't really think it was going down to gold, to be honest, but I thought it could easily go to blue or purple. And so the put options up here were very cheap, and obviously they came out very good. But it's holding the gold, so you know your line in the sand for a JP is at 220, and it went down to 225. So you'd like it to stay. No, well, you got a low surrounded by higher lows. You don't have to figure out that you don't want that taken out. But the earnings are coming up on the 11th of April. So this is one that I'm going to have on my radar to see what it looks like going into earnings. And that would be the financial sector. Materials, right? Let's take a look at Freeport-McMoRan and see if anything's going on with materials. There you go, a little bit. You see, and then you look at the divergence here. You're down here at 36, and over here you're at 46. And that's a divergence, and that's why it's on its way. Now, it's got resistance above. Let's look at the long-term graph, though, and see if that tells us anything different. Yeah, you see, this thing has got to get back above 40 bucks. If it gets back above 40 bucks and then 45 bucks, you don't know where it's going because it looks like it would be back on the bicycle. And this is something that's used in infrastructure, and it's used and it's demand, and they're not making any more copper mines. And there's not that many dealers in this kind of thing. So, you know, that's something to keep an eye on as well. Other stocks that people are looking at here, Reddit, RDTT. Some guy said he was going to buy it today at 140. I said I wouldn't do that. And let's take a look at why. You see, that's called a traffic jam right there at 140. What? Everything's in there at 142. What was the high today? 142. You think that's a coincidence? Now it's trading 124. Anybody who bought it today, 142, they're already in not very good shape. So again, could it have a rally? Of course, but I wouldn't want it to get until it gets above 142 and even above 150 because there's a gap there. You don't know if it's just going to fill that gap at 150 and go right back in the soup. Next one that everyone loves is that Tesla. Tesla's very interesting because it's down in a zone where you might want to buy it. It's hard to buy anything with the guy who runs it because, you know, he's a very polarizing character, and it's hard to believe he can run Doge and all these companies at the same time. But we're not in a personality business. We're in an investment business. So here's the deal. It's holding these lines pretty good, which is what, 238, right? Hanging in there. But if it breaks there, as you can see, the next stop could be as low as 120 bucks. Now, you don't have the setup for that right this second, maybe. Again, you're right on the lines, you see? So this thing's going to make a decision here. It looks like it's near a low point, so I'd keep an eye on it from the upside. But if it breaks, you know, bring your parachute because, again, you see gold and purple are right there at the same price. And when they're at the same price, that better be the support zone. Otherwise, as you can see, there could be a trap door here. Again, these guys are losing market share in Germany. They're losing market share in China. And everyone is betting pot on these driverless taxis. If this driverless taxi stuff does not go, or maybe one of their competitors come up with a cheaper, faster way of doing it, this is going to be a problem. And is this guy possibly distracted? It seems like he might be. If he's not distracted with business, 13 children would probably distract him, maybe two. Anyway, so that's the story on Tesla. Very important spot. Good place to take a hard look at it for sure. And let's just look at Amazon because, it's such a great company. And it is on sale. And there you go. So it got to hold in here at this 200 mark, and it's not doing a very good job. So a trap door could really send you down here quite a bit. And then and it's holding the line. So right this neighborhood, I'm telling you, got to hold this neighborhood. If it doesn't, you got real problems. What would make the trap door open? We go into a recession. We go into a recession. you know, or we go into some contraction of these valuations. 22 to 1 PE ratio with the consumer not spending much money. Look at retail sales today. That's a little bit scary. So a contraction in the PE ratio would be enough to make some of these things maybe go into a lot further drop. Okay, we're getting to the top of the hour, so I'd like to ask you to do something if you'd be kind enough. I would like you to click on the link that David's going to be putting up. I have a options alert service that we have that comes out every Sunday night. I just came out with a new one. It had Alibaba in it. And so basically you get that. And if you're just starting out or you need a refresher, we give you an options course, 3 sessions, 6 hours. It goes for $395 separate, but it's included in your subscription. So you get a nice course. I'm the guy doing the course with Daniel Sinig. And so you can text me and ask me questions on what you have in the course. So you get one-on-one coaching with me if you have any questions. And like you've seen tonight, I follow everything and I can give you my view and my opinion on just about all the markets because I follow them all. I didn't even get into some of them because time ran out, Bitcoin, gold, etc. So you get the course. You get the alerts every Sunday night, which give you ideas, market commentary, and other information. And then you get coaching, which means you can text me, we can set up a meeting, and we can go through things just like we're doing tonight. And then finally, every week we have a free webinar called Lunch and Learn. And you can go to that free webinar. So there's 2 ways to go. 90-day, 3-month subscription. Both have $100 off. And the other one is a 1-year subscription that has $100 off. You get 4 times the alerts and 4 times the coaching in the 1-year deal. And so all you've got to do is, click on what David's going to put up, and he'll be able to send you over to the link. And then once you click in, I want my options alert service, it'll give you your 2 choices. Now, I've just talked to some of you guys initially here for the first time. If you would like, you could email me at optionprofessor.com, OPTION professor, PROFESSOR, and let me know when you'd be available to talk. When you're in front of your computer, always better. And it could be after dinner because I'm on Pacific time. A lot of you guys aren't. And we can discuss how I can help you. And then if you have any questions, we can answer them then. And so I think it's a pretty good deal all the way around because, again, a lot of you people need education, so you get the class. A lot of you people would like to hear ideas that I come up with. I'll share them. A lot of you people would like to know what my opinions are on some of these things. I share them every Sunday night. And then, of course, a lot of you do need coaching because this is not an easy racket, this option. How do I get into these things? Once I'm in, how do you figure out when to sell? How do I adjust my positions and how much time should I let go before? I have opinions on all these things and I have methodologies that I like and I share them with you. So if you're trading credit spreads, you're trading short-term options, I don't think it would kill you to get a second pair of eyeballs on it with somebody who's done it for a long time. And then, of course, you've got the ongoing webinars that are helpful as well. So again, I want to thank everybody for being here. I hope I gave you some information you could use, and I certainly hope that we can continue the conversation as you guys become subscribers. And like I say, there's an awful lot that I bring to the table for you, so I'm pretty confident that I could add some value to your option trading. All right, guys, thank you very much. And thank you for David for putting up with us here and letting me do this solo episode. Again, I'm Jim, the option professor. Anything you'd like to talk about or you want me to talk to you about, just email me, optionprofessor gmail.com. Otherwise, we'll be talking to you down the road. And again, thanks for being here, guys. Have a great evening, and we'll talk to you soon.